Good afternoon, guys. I'm Nolan from Trade and Train, and this is Tuesday's top charts. So I'm going to go through a couple of the top charts on our watch list this week. Also going to talk about our brand new 90-day Forex Freedom Challenge, which Mark has talked about in some of our other YouTube videos. But we formally announced it on our free Telegram channel. And if you're not a member of the Telegram channel, then I will put the link in the description and you can just join for free. So don't worry. So I'll talk about that in a bit. So right this moment in time, we're going to go through some top charts. But before I do, just want to pull over a calendar for you of news announcements coming out. Now, Monday, Tuesday has been really quiet, as you can see, but as of tomorrow, okay, it does get very busy, very congested. So, you know, with any of our top charts that I'm going to go through today, just be aware of any news that's coming out before you look to place any trades. And if you do place trades, then maybe you would possibly reduce your risk. You know, the kind of industry standard, if you like, is 1% risk per trade. Well, there's no harm in risking 0.5% or even 0.25%, you know, in times of uncertainty. And sometimes it's just best to stay out of the market, you know, and wait until everything's kind of calmed down before you start to trade. But this is Forex Factory under the tab here called calendar, and you know, this is totally free. It's on the internet. It's not 7:25 a.m. by the way, it's 5:30 p.m. here in the UK. So yeah, lots of news coming out tomorrow, so just be aware, especially on Euro, especially on USD. We've got the Fed talking as well, and press conference statement, etc., etc. Thursday, you've got some Aussie news, then Swiss news, Swiss franc, and pound, and then yen on Friday. So just make sure you are aware of the news this week before you place any trades. All right. So first currency pair I want to have a look at is Euro Kiwi. Okay, the euro against the Kiwi dollar. As you can see, this is the weekly time frame. We've got a bounce here, and potentially a bounce here as well. Not last week, the week before, okay? We came in, bullish candle, then we've seen a little bit of a pullback, and this is the current candle. But I just want to have a little look at what's actually happening on the smaller time frame. Now, depending on your trading knowledge, there is something called an inverse head and shoulder pattern, which is a reversal pattern from sellers into buyers. Okay, we would normally look for an inverse head and shoulder pattern at the bottom of a downtrend. So some of you might have heard of a head and shoulders or a inverse head and shoulders. This is an inverse head and shoulders potentially. Okay, so what we are possibly seeing here is a left shoulder, a head, and a right shoulder. So let me just draw, if I can find where it is on TradingView. We'd be looking for something like this in an inverse head and shoulder pattern. Basically, we're looking for a low, a lower low, and then a higher low, meaning that cyclicity is changing. Okay, we're looking for basically a downtrend, yeah, going into an uptrend. Okay, and we're looking for cycles to change, you know, so we're doing something like this, and then we're basically doing something like this, so that downtrend is changing into an uptrend. So that is what potentially is happening on this particular currency pair. Nothing is 100% in trading, which is unfortunate because it would make our job a lot easier. Operating this software at the moment isn't very easy, but yeah, so just look out for that. Okay, and what we would do in our inverse head and shoulder pattern, we would look for the break and retest of the what's called the neckline. Okay, so if I draw that in there, we can see that price is finding support, sorry, resistance here. Okay, resistance coming into that kind of area, almost there, pushing down, coming back into the same zone there, pushing down. So we could be getting that inverse head and shoulder pattern here. Something like that. Okay. So what you would do as traders is just wait this one out. Okay, just wait this out until you get a nice break through the neckline. You look for a pullback of the neckline, so pullback to the neckline, retest it, and then you're looking for buyers to come in there. Okay, so you're just going to wait this one out, look for that first impulse breaking the neckline. And by the way, guys, this is the neckline. Yep. Okay, I'll write that in just in case, you know, some of you guys might want to take a screenshot or something just for your own education. Neckline. So look for the break of the neckline, look for the retest, and then you're looking to try and get in here as sellers turn into buyers. Okay, and there's different candlestick patterns you can look for here. But that is what, ideally, this is where you're looking to trade this, but after it pulls back and retests and reject. So keep your eyes on Euro Kiwi, because this could be a really nice trade. You know, when you look at the bigger time frame, you can see that price can, you know, move a fair distance from this level. Now, I don't know whether it's going to move all the way into 1.99, but there's a few, you know, there's a fair amount of pips on the line there if you can get in with a nice entry. So keep your eyes on Euro Kiwi. Now, obviously, with everything to do with Brexit going on, you know, there's a little bit uncertainty in GBP, and you know what's actually happening with Brexit. One day it's good news, one day it's bad news, one day there's a deadline, then they're going to extend the deadline. You don't really know what's happening. I'm going to talk about GBP in a particular, well, two currency pairs actually, but whether you actually trade them is going to be down to you. And if you do trade them, then please, please, please use reduced risk. Okay, because there's definite uncertainty in GBP at the moment. Now, Gbp Usd Cable is approaching. It's got a little way to go yet, but it's coming into slowly this 1.35 area or zone again, as you can see. Now, this area is being heavily defended by the sellers, as you can see. It came in there, 1.3515 was the high. Here, went a little bit higher, 1.35. Oh, no, actually. So this one was 1.35, yeah, 397. So it pushed up into 1.35 there and rejected. So this 1.35 zone is a decent area to look for sellers to come in. Okay, but you wouldn't just sell here. You would wait for price to come in, and then you'd have to be an intraday trader looking at the smaller time frames, maybe the 5, maybe the 15, looking for that very, very early change of cycle and rejection of this 1.35. So if we get to that level, then it's worth having a look, but please, please, please use reduced risk. But we may, you know, we may come into 1.35 and just continue upwards. So you have to remember that as well. And if we do have a nice solid close above, then we'll be looking for the pullback into 1.35 and then looking to go long or to buy if we can see the retest and rejection here. Also, we may actually, If we come into 1.35 again, we may reject here. Might see a nice break of this trend line, which would be great actually if you were able to get in at this level. If it rejected, look for a break of the trend line, look for price to pull back, and look to sell. Okay, so but I think there's a nicer chart at the moment. Potentially you could trade, maybe even today. You'd have to have a look at it, and that's Eurogbp. Okay, so Eurogbp, as you can see, I've got a couple of moving averages on here, exponential moving averages. The one in white is the 8 EMA, the one in blue is the 20 EMA. And you can see that price is starting to cycle. Okay, we've had this downtrend here, and then we've started to see buyers take control of the market. We've seen some buyers there pull back, and an engulfing buyer bar there, little pullback. Some buyers came in, but yep, sellers took it back down, pull back. Buyers came in again, made a new high, and now we're pulling back again. So is this going to continue? You know, are we from here going to see another high? Well, we don't know that, but you know, we trade what we see. And we can see prices coming down into these EMAs, you know, 20 EMA, 20 EMA, and it's round about that area now. So it's worth having a look to see if buyers come in. So, you know, you're going to be going down to the smaller time frames to look for that very, very early change of cycle. So, you know, is this making what we would call a double bottom? You know, price may be coming down into this zone here and reject it twice, and then we'd be looking for buyers to come in. So that's a possibility. We can't determine that at the moment because it's in the zone now. We need to see this reject and need to start seeing price push to the upside. Okay. We want to see we want to see something like that. Okay, we want to see price push to the upside. So just keep your eyes on this. Now, remember, it is GBP, so please, 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 if you are looking to trade this, if your analysis agrees with what we're seeing, then it's GBP. Use reduced risk, whether it's 0.25%, 0.5%, whatever, you know. But just be sensible. Don't go in your full 1% or even 2% thinking, oh my God, this trade looks amazing. Because believe you and me, something comes out in the news and could be stopped out in an instant. You could also hit target in an instant, don't get me wrong, but more likely than not, you'll probably be stopped out. So just keep your eyes on that one. It's in a really, really nice zone to start looking for buys. Okay. Last one I want to have a look at is dollar yen. Now, dollar yen is in this descending, you can almost call it a descending wedge, I suppose, because the area of resistance here and support are gradually coming in together. So we would call that a wedge pattern. But inside that wedge, price is actually in a range. And as you can see, within this range, we've come into this little zone here, around about 103.7, a number of times, rejected here, had a false break here. Okay, this is why we always look for retests on trade. We don't trade breakouts, because if you would have traded that breakout there, you know, you'd have probably got stopped out. So this is why we always look for a break of a level, a retest, and then look for a continuation. Here you didn't get it. But we're actually back in that same area again. So it's worth looking for buyers to come in because it's at support. Now, if for some reason we don't see buyers come in and then we have a break to the downside, well, let's just have a look at the bigger picture. You know, you've got to look at this, like I say, descending wedge pattern. If price does break to the downside, then anywhere from where this low is down into anywhere around 1.3, I would say, I'd be looking for price to reverse. Okay, you know, if we do break to the downside, then I'd be looking for basically that trade there, looking for sellers turning into buyers. And you know, price could then, it could actually bounce again from here, who knows, or it might actually break out and you could actually look for a pullback and a buy. So you'd actually be buying from here. Okay, if you stayed in the trade and it broke out, you could look for a pullback, continuation, and you could actually have two trades. Okay, but we don't know that that is going to happen. It might bounce, but it's in a nice area at the moment, so you can look for that rejection. And I wouldn't actually, trade it to the top of this range personally. Maybe just trade it, to look to trade it to the kind of the middle of the range, because you can see here it failed to go to the top of the range here. But just keep your eyes on it. It may be something of interest, but keep your brain aware of the news, okay, because that is coming up tomorrow. Lots of USD news, so it's just one of those things. A lot of things setting up, but sometimes the timing just isn't right, and it's just one of those things, unfortunately. Sometimes it's more profitable to stay out of the market, let things die down a little, and then look to trade. But nice area right this moment for USD yen. Nice area for euro pound, and euro kiwi. We're going to look for that break of that neckline, look for that pullback to retest the neckline, and then look for a long opportunity. So those are some of the top charts on our watch list at the moment. So yes, the 90-day freedom, Forex freedom challenge. Okay, so if you are not a member of our Telegram group, then please make sure you do subscribe. I'm going to put the link in the description underneath this video. It doesn't matter if you are brand new to trading, when you've got experience, because we will be training you for free. Yes, for free. Giving you strategies, a checklist, and the top 5 traders in the 90 days. The traders that can stick to the rules, have plenty of discipline, and produce the best results, percentage results, will be getting prizes. And I will need to read the prizes because my memory is shocking. First prize, a year subscription to Trade and Train, and a 10k funded account to trade, and a place on our 2-day essential trading program. For second and third place, there are 6-month subscription to Trade and Train, and a place on our essential trading program. And fourth and fifth, 3-month subscription to Trade and Train, and a place on our essential trading program. And yeah, it's totally free to enter. All you will need to have is a funded account. But for more details and to register, please send your interest to sophie@tradeandtrain.com. Okay, that is who you need to email if you are interested in taking on the challenge, and Sophie will get back to you with all the details. So traders, from me, Nolan, and the Trade and Train team, be careful out there. Markets are full of uncertainty at the moment. Okay, Brexit, the Fed announcement tomorrow, so just be careful. I think I've mentioned that once or twice. Be careful. Okay, I will speak to you soon. Bye for now.